I think China is crucial, and global investors have face a dilemma because, on the one hand, China will undoubtedly be the biggest growth market, for the next 20 years until India comes along, and India is in no way close to the growth prospects that China will exhibit. On the second hand, investing in specifically in tech, but almost in any industry, is a bit of a risk because the Chinese government has shown that it's favoring social cohesion and social stability well above investors' interests.
And let's just focus a little bit more on SoftBank itself, because if you look at, net profit was down quite a lot, almost 40% year on year. But one of the other issues that investors have started to raise is that of its corporate governance, and the fact that Masayoshi Son is a man who is clearly very influential within his own company, but has also surrounded himself by yes men and people who are very eager to please the manager, even though that could come at the sacrifice of taking decisions that would normally not be taken in an institution that has more resilient and more robust corporate governance in place. How big of an issue do you think this is going to be for investors going forward?
I think it's a huge issue. On the face of it, you invest in SoftBank almost as a tech ETF. They're investing in all the big tech themes: artificial intelligence, the Internet of Things, robotics, quantum computing even, and so on. But on the other hand, the biggest issue, the biggest theme, if you like, at the moment for investors is ESG, environmental, social, and governance. And certainly SoftBank's governance leaves a lot to be desired. They need to be more open. They need to be more transparent. And that's going to be even more important going forward in this new era of a focus on ESG. So in many ways, investors in SoftBank are really investing on Masayoshi Son as opposed to SoftBank itself, because SoftBank itself needs to improve its compliance procedures before it can compare itself with some of its competitors.